Hey guys, welcome back to the channel. This is Pilar Newman, and in this video, I'm going to go over margin investing on Robinhood. Now, margin investing is an optional feature that you can upgrade to. It's offered through Robinhood Gold, and this is where you can borrow money from Robinhood to purchase securities such as stocks and ETFs. Now, the account that you're seeing on your screen right now, it's an account that I am specifically growing using margin investing. Now, I recently recorded a video for you where I shared the 3 different strategies that I tried on how to make money on Robinhood with margin investing. Now, I did find one strategy that worked particularly well to consistently make money. I will link that video for you down below underneath this video. Now, one of the draws to Robinhood margin investing is their low interest rates to borrow money compared to other brokerage accounts. Yeah, so these low interest rates really drew me in. This is one of the reasons I decided to go ahead with margin investing, but this is not something to take lightly. If you are leveraging money in order to make more money, you have to know what you're doing. You have to be very responsible with this money as well, because you are essentially borrowing money, right? So just like a credit card, if you go out there and buy something, you have to pay that money back, and on most occasions, you have to pay it back with interest. It's the same thing with Robinhood, but in this case, you are able to borrow money in order to buy more stocks. So let's look at how much it's going to cost you to borrow money from Robinhood. Now, this is really important to note. Anyone can upgrade to Robinhood Gold, but if you want the feature that includes margin investing, you need a minimum of $2,000 in your account. That is how you're going to access margin investing through Robinhood Gold. All right. So you can try out Robinhood Gold for free for your first 30 days. You can try it out. You can see if you like it. At the end of the free trial, you will be charged $5 at the beginning of each billing cycle. You can cancel that though at any time you'd like. So now, for your first $1,000 of margin use, so basically for the first $1,000 that you borrow, that's already going to be included in your $5 monthly fee. Any amount you borrow after that will incur a 2.5% yearly interest rate. Here's a simple example that Robinhood gives to us. So let's say you want to borrow $3,000. That means you're going to have upwards of $3,000 of margin that you can use on Robinhood. Now, the first $1,000 is included with your monthly fee of $5. That leaves $2,000 that is subject to interest rate charges. The way you calculate that is you take the 2.5% yearly interest rate, you divide that by 360 days, and you multiply that by $2,000 that you are borrowing. That comes out to a 14-cent per day interest rate that you are going to be paying to Robinhood. So how much does that cost you per month? Well, let's take a look. If you're borrowing $3,000 on margin from Robinhood, it's going to cost you 14 cents. Now I have the calculator out here. 14 cents times 30 days in a month is $4.20 per month that you're paying on the $2,000. Plus you are paying $5 monthly fee for that first $1,000. So in total, you're paying $9.20 per month to borrow $3,000 from Robinhood to invest it in stocks. If you compare Robinhood's 2.5% yearly interest rate to borrow money from them versus other brokerage firms such as Fidelity Investments or Charles Schwab, you'll see that Robinhood offers a significant discount to its members. Now, these other brokerage firms will charge you upwards of 8% yearly interest rate, and that's a significant number, especially if you're trying to use that money to make money in the stock market. So the way that margin investing on Robinhood is going to benefit you is if you are able to make more money in the stock market versus the amount of fees and interest rates that you are paying for the borrowed money. So let's say you use $3,000 in margin on Robinhood. You know you're paying $9.20 per month in fees and interest rate. Then all you need to do is make more than $9.20 per month in order for margin investing on Robinhood to be worthwhile to you, right? It sounds easy, but there is something called a margin call. If you're borrowing money from Robinhood, then Robinhood wants to make sure that they are covered. And one way in which they do that is by requiring you to have a minimum portfolio value. Now, if you go below that minimum value, they are going to issue you what is called a margin call. This means you need to either put more money into your Robinhood account, or you have to sell some of your stocks, some of your securities in order to go back below that minimum portfolio value. One way that Robinhood uses to determine your portfolio minimum value is by assessing the level of risk of your entire portfolio. So the next time you go to buy stocks, take a look at that information underneath those stocks. You'll see that there's a certain designation of risk on each stock. So some will say low risk, some of them will say medium risk, others will say high risk. If you are buying stocks that are high risk, then you will be required to have a higher portfolio minimum value. And again, that's because Robinhood is trying to make sure that they are covered in the event those stocks, those high risk stocks, take a dive and you need to pay them back. So that means you're going to have less money to invest in those stocks because Robinhood will prevent you from borrowing too much money for those types of stocks. When I did my 6-month experiment of trying to make money on Robinhood with margin investing, I constantly was running into margin calls, and that's because my minimum portfolio value kept falling below the minimum threshold. So when that happens, you either have to sell off some of your stocks at a loss sometimes, or you have to put more money into your Robinhood account. And in my case, I ended up putting $900 additional money into my Robinhood account in order to stay above that minimum maintenance level that they required from me. So that is something to keep in mind because margin investing is one very quick way to lose money if you don't know what you're doing. Okay, so we just went over margin investing, but there's one last quick thing that I wanted to bring up to you, and it's called pattern day trading. Now, if you have an account on Robinhood that has less than $25,000 in it, then you want to make sure that you are not doing day trading on Robinhood to the point where you're placing more than 4 day trades within a 5-day trading period, because if you do that, you will be flagged as a pattern day trader. So a day trade is if you buy and sell a stock within that same day. So let's say, for example, I buy 10 shares of the Apple stock and it immediately goes up in value and I want to book it and take that profit. So I go ahead and I sell it that same day. Well, that's considered a day trade. Now, if you place 4 day trades within a 5-day trading period, you'll be flagged as a pattern day trader. Now, if you have a portfolio value under $25,000, then you will be prevented from buying shares of any stock after you place the 4th day trade. Okay, so Robinhood will essentially lock your account on that 4th day trade and say, hey, for the next 3 months, you cannot buy a stock. You can sell shares of what you currently have, but you cannot buy any stocks for the next 3 months. Now, that's not a Robinhood thing. That is an industry regulation. And so Robinhood has to adhere to that. And that's in place basically for your security. They don't want people, the United States doesn't want people losing money by gambling their money essentially in the stock market. But now if you have more than $25,000, well, that pattern day trading restriction is lifted and you can actually trade as many stocks as you want, day trade as many stocks as you want in a given day, right? So they're essentially saying if you have a lot of money, basically you either know what you're doing or you can risk losing that money because you have a lot of money. Now, I don't think margin investing is a bad thing if you use it in a responsible manner, but if you let greed overtake you and you're using borrowed money to make a quick buck in the stock market, then you may very well lose all of your money if you are not careful. So please be careful with margin investing on Robinhood. Now, guys, do me a favor. If you've enjoyed this video, please go ahead, give this video a like, subscribe to my channel if you want to learn more about making money with stocks as well as with affiliate marketing. And hey guys, I will see you again in the next one. Take care. Bye-bye.